Hello class, today we're gonna discuss chapter 2, which is job order costing, calculating unit production costs using the book called Introduction to Managerial Accounting. It is done 9 editions by McGraw-Hill. What is job order costing? Job order costing system are used when there's a different products that are produced each period. Products are manufactured to ordered. There's a unique nature of each orders that requires tracing and allocation cost to each job and maintaining costs to record for each job. What are the example? Back to international large-scale constructions. Example here, Boeing, which is aircraft manufacturing, Vistaprint, which is designer printing business card, and SG Skychief, which is prepare of airline meals. Example, direct job cost flow 1. Job number 1 here, there's a direct materials. Direct material number 2, and number 3. This is a change of direct labor cost of each job as work is performed. For this is direct material go to job 1, job 2, and job 3. Direct labor is called job 1, job 2, and 3 based on the flow of the charts. Okay, for the job request number flow, there is job number 1, number 2, and 3. There's as well as an indirect cost because the manufacturing overhead that goes to job number 1, job number 2, and job number 3. What is the manufacturing overhead? This includes direct materials and indirect labor that are allocated to all jobs rather than directly traced for each job. Okay, what is the job sheet? This is a typical job sheet. For example, shows up here in terms of wooden cargo crate, in terms of direct materials, direct labor, manufacturing overhead, total cost, and unit product costs. Okay, the job cost sheet, when you're going to measure direct materials, cost 1. Example here, Pirco, requisition number 6890, job 143. Example for 12. Unit description for 12 feet here. Unit cost $3, total is $36. And then for another one, 1x6, which is 12 feet for 20 units, unit cost of $4 is $80. Total will be 116. Okay. And then for the wooden cargo, XG 116, direct material is 116. Okay. Once you do that, you're gonna go to the next one, measuring direct labor cost. Example, a time starting is 8 o'clock, finish is 16:00, which is about 8 hours. Hourly is $15. Amount job total 15 times 820. This is a job number A143, employed by skill. Okay, this is a typical direct labor cost job. Okay, then job order costing. Once you find your direct materials, you find your direct labor and tickets for hours. 36 times 820. There you put it there. Okay. Then compute the predetermined objective number 1, predetermined overhead rate. So when you do that, you're gonna do an allocation base, such as direct labor hours, direct labor dollars, or machine hour that is used to assign manufacturing overhead to individual. We use an allocation because it is impossible or difficult to trace overhead costs to a particular job. And manufacturing overhead consists of many different items, ranging from the grease used in the machine to the production manager's salary. And many types of manufacturing overhead are fixed even though output fluctuates during the period. The POHR, which is predetermined overhead rate, used to apply overhead to job and is determined before the periods begin. It is an estimated total manufacturing overhead cost of the coming period divided by total unit in the allocation base for the coming period. Ideally, the allocation base is a cost driver that costs overhead. Okay, the need for POHR because rates rely upon estimated data and often used because of the following. Actual overhead for the period is not known until the end of the period, inhibiting the ability to estimate job costs during the period. And then actual overhead costs can fluctuate seasonally, which is misleading for decision makers. To determine overhead rate is computed before the period begins using a 4-step. Number 1, estimate the total amount of the allocation base that will be required for the next period. Estimate level productions. Number 2, estimate the total matching overhead costs for the coming period. and the variable matching overhead cost per unit of the allocation base. So you're going to use a formula y equal to a plus bx, where y is an estimated total manufacturing overhead cost, b is the estimated total fixed manufacturing overhead cost, and A is the estimate total fixed manufacturing overhead cost, B is the estimate variable manufacturing overhead cost per unit of the allocation base. Okay, so remember, Y is the estimate total, A is the fixed, B is the variable, X the estimate total amount of the allocation base, then B compute determined overhead cost. In objective number 2, we're going to apply overhead cost to job using a predetermined overhead overhead rate, not cost rate. Okay. Example, PERCO estimates 160,000 direct labor hours to meet the company period. Production level, in addition, the company estimates total fixed manufacturing overhead at 200,000. Variable overhead cost is 275, so you're going to add here 200,000 plus 2.75, 100 times 160 labor hours. So you're going to add here. Where you got 2.75 is coming from here. Where you got 160 is coming from here. Where you got 200,000 is coming from here. So you add it all up, you're going to get 640. This is 640 divided by 140, 160. You got a $4. PHOR is $4 per direct labor cost. Okay, look at these hours. Direct labor, manufacturing offer 8. Okay, so you're going to get 32. 8 times 4, 32. Okay, that's how it goes about. Learning objective 3, compute the total cost and the unit production cost of a job using a plain white predetermined overhead rate. So you're going to add total here, you add all of them up, you got 268. Once you get to 68, then you got the unit production cost. Okay, 134. Okay, all right, let's look at the next one. This is a good example for you. The practice concept check. What is the answer for this? Okay, job WR53 required 200 direct materials and tail labor hours 15. Estimate total will be 760, and 20,000 is the total labor hours. What is the record cost of the job? Okay, if you 1 or 2 minutes, basically the answer for this will be D. How do you get the D? This is how you get 760 divided by 20. 760 is coming here, 20 is from here. You got 38 direct labor materials will be direct labor, 15 here times 10, this is 150. Direct labor materials 200 is coming from here. Labor is 15 here times 10, 150. Manufacturing is 38. Where you get the 38 coming from? This is the one. Okay, this is the one times 10, 387.30. That's how you get the calculations. Alright, let's move on to the next one. Choosing an allocation base. Job order costing system often use allocation base that do not reflect of job actual use for overhead resources. The allocation base is the predetermined overhead rate and must drive overhead costs to improve job cost accuracy. A cost driver is a factor that causes overhead costs. Many companies use a single predetermined plan-wide overhead rate to calculate all manufacturing overhead costs to job that is based on the usage of direct labor costs. This is often simplistic and incorrect, and assume that the labor cost in a company is only manufacturing overhead cost drive. That's why this is just the issue reason. Overly simplistic, using applying all the rate to everyone's in the product category. It is more one overhead cost drive can be identified. Job accuracy is improved using multiple predetermined overhead rate. So each job cannot be simplified by assuming everything the same. So you must able to identify them and improve them by using a predetermined overhead rate. So each unique job has to have a unique overhead rates. Okay, so let's look at the objective number 4, which is compute the total cost per unit, total unit cost of a job using multiple predetermined overhead costs. Dixon Company has a 2 production department, milling assembly, and company use job order costing system and compute the predetermined overhead rate in each production department. The predetermined overhead rate is the milling department is based on the machine hours. Assembly department is based on the direct labor hours. The company uses cost plus pricing, which is a markup of 75% of the total machine cost to the best selling price of all jobs. At the beginning of the year, the company made the following: milling and assembly, machine hours 60,000, direct labor 8,000. Cost is 290, variable cost $2 machine. For this is for milling, while assembly will be 3,000 for machine hours. direct labor 80,000, total fixed overhead will be 500,000, variable overhead will be 300. So each has its unique costs. Okay, the milling one and the assembly one is different. And then once you do that, you're gonna describe step 1. During the month you want to use the premium department head cost, so you got 390,000 plus 2 times 60, you got 510 for milling. For assembly we have 500 plus 3.75 times 800, you got 800,000. That's the first step. Okay, second step, you're gonna calculate the amount of premium overhead rate for each department using the previous slide. Okay, meaning the department with 110 divided by 60, you got 8.5. For assembly will be 100,000 divided 80, you got $10 per DLH. Okay, and then after that, step 3, calculate the amount of overhead, and then they are applied to both job department. Okay, so machine hours 90 for milling, direct labor and right hours, direct materials 800, direct labor 70, assembly will be 4, direct labor 20, direct materials 370, and then direct labor cost is 280. So for milling will be 90 times 8.5, which is 6.65. Okay, 90 is this one. Okay, and then 8.5 from the previous one, previous slide, and then for here is 20. This is the one, direct labor hours times $10. The previous slide is 200. Okay, and then step 4 is based on the calculation of this. You're gonna calculate this, plug in together. 800, 370 here, you got 1170, direct labor 70, 280, you got 350, making overhead 765, 200 is 95, total job cost is 407. And then after that, you're gonna do step 5. Step 5, which is selling price, you're gonna get 2485, which is your job here, times 75 markup. So the selling price will be 4347. Okay, and then for the company perform overhead rates based on activity-based approach. It is complying on approach based on activities-based costing. Activity-based costing is an alternative approach to develop multiple premium overhead rates. Managers use activity-based costing system to more accurately measure the demand for the job, product, customer, and other cost object to make an overhead resources. So, what are the things we're gonna do? The amount of overhead applied to all jobs during the period will differ from actual amount of overhead costs incurred during the period. When the company applies less overhead to production than actually incurred, it creates a non-under-applied overhead. If it is applied more overhead productions, that is result in over-applied overhead. So basically, if you over-applied, you're going to be over-applied. If you under-applied, then you apply less, then you're going to be under-applied. So the adjustment for the cost of goods sold, the statement might be adjusted to reflect under-applied or over-applied overhead. The adjustment for under-applied for overhead increase cost of goods sold and decrease net operating income. The adjustment for over-applied overhead decrease cost of goods sold and increase the net operating income. These are the detail of the next company job sub ledger from here. All the detail give you the total cost and give you another work in process and finished good summary of the worksheet reporting system and the balance sheet. Okay, and then look at the next one, the cost of goods sold of summary of the financial record, the expense per job account for the reported in CGS. And then the attention will be focused on the emphasizing the job order costing and also used in service industry. Job order costing is used to many different types of service, for example in law firms, accounting firms, and medical treatment. So this is a standard job costing is standard. This chapter number 2 is the standard practice when you are doing a CMA program. In the first year, it will be all job order costing. Okay, so that's basically the end of chapter 2. Thank you everyone. Hope to see you soon. Bye bye.